All righty, what's going on, ladies and gents? Welcome back to the channel for another market update. Hope everybody is having a lovely start to their New Year's. And with that being said, let's dive into the TA. All right, guys, we are closed today. We will have market resume trading tomorrow on Thursday. But today we are going to be talking about what happened on Tuesday. We're going to talk about what we are looking for moving forward into the end of the week. And then we're going to be discussing, we'll actually start off the video with this, these monthly candles. All right. So Nasdaq over here, QQQ, did not print a pretty monthly candlestick. Does not suggest the immediate upside is coming this following month. All right. You can look back at this. All right. And it can happen. But, we typically are not going to, see prices just return back up to the highs after printing something like this. All right. If we are going to do that, we could even, swing down and then do that. Okay. I do think with how things are set up over there on the daily time frames and the 4-hour time frames, all right, or the daily charts and the 4-hour charts, I do think we're probably going to be, seeing downside as being limited right now. And then we are going to bounce back. On that bounce back, I don't know if this thing is going to make new highs. I don't know. All right. I think it could just turn into one of these things where we do end up, seeing, we saw this back in actually July. We could just pull out the blueprint for this move. All right. And it was literally golden pocket to golden pocket to golden pocket. All right. Until over here, the tell was you were not stopping at the golden pocket right here, the 0.786 fib. You were getting above it, and you based above it around the previous high, and then you ascended, and you started your stair steps upwards instead of downwards. All right, so, because of what we just printed on the monthly chart, I am just going to say, I don't know if Nasdaq is going to be returning to the highs the next month. I personally don't think that is likely after we just printed this. That is just my opinion. All right, when new data comes out, we have to, adapt. We have to adjust. And this is something that is happening. And if you just look back, you usually don't see, us just start resuming our uptrend after that. Okay, even, you got something similar over here. It's not the same, all right? I would say this is kind of the ultimate reversal candlestick over here. Not Dragonfly, the Gravestone Doji candlestick, like this is something that, even if prices to resume, you are going to dance around for a little bit. Okay. So, keep your expectations within line. Do not be expecting, craziness. I do think, we are probably going to have a decent rally over here right around the corner. Okay. But this is something that, has just occurred. And I think it's worth talking about. Now, at the same time, I'm going to remind everyone, all right, this thing, when you're down here, this is when you are going to be bottoming out. You have, it's sitting at 28 right now. You have over here, well, it's at 27 before the next day. You got into extreme fear. It was August 5th. You thought the market was crashing, okay? And then it actually marked the bottom. But my point being is once you got to where we are right now, you were pretty close to the bottom. Just like when you got over here into extreme fear territory, okay? You went straight from, 30 over here down to 22. And this was our last bottom. When you are down where you are right now, the bottom is probably right around the corner. You can go back for years and years and years. It is how that happens, okay? Unless the market is, going through what it did in 2020, COVID 2020, where you just fell off a cliff and you kept falling off a cliff, okay? You were probably in that territory over here and you had a sick, nasty bounce, but it didn't really hold, and then you died. I don't think we are having a market crash right now. I think it's pretty safe to say this is not a market crash. We do not see VIX, acting in the way it would be doing so if we had that going on. Come back to 2020, all right, where it just kind of took off into the heavens and it was way up here. We are not seeing that. So I do not think the market is crashing right now. I think it's very likely that, we are going to be seeing a little bit more downside after what we saw on Tuesday, bearish engulfing candlesticks that, showed that bulls had their chance. They did. You gapped up near the highs of the previous candle, and then you faded the whole thing and put in a bearish engulfing candlestick and closed out near the lows. that is showing that the bulls had their chance. They didn't take the chance, and bears did instead. All right. And that, is telling me that we're probably going to be revisiting these lows over here. But my point is, when we were at these lows, guys, the market was fearful. The market was still fearful over here. Okay. Like where we are right now, you don't have this going on and you fall off a cliff. It doesn't happen. In reality, we came back down to the lows from the following candlestick. It is not the worst in the world. QQ was down a little bit more over here. All right. But we're going to come over here to IWM. And I'm going to just remind everyone, hey, bullish divergence here on the daily RSI. Either this is the low or it's going to come down to 215, guys. That's like 2% away from current price. That is not a reason to, get extremely fearful. This is the part in the market that, drives most people insane because the market doesn't go straight up. And guys, I'm just going to tell you from experience, you can't nail everything. You can't. All right, you can try, but you're probably going to drive yourself crazy in the end, and you can, become a short-term option trader and, think that you can make a ton of money both ways. But at the end of the day, all right, I personally have not found any success from the short-term option trading. I just don't think it is worth, putting your focus on that. I think, eventually you're going to come to a time where you don't get it right. All right. And, I'm going to be completely honest. You're going to have such a better time if you just expand your time horizon and realize when things look the way they are, this is when you load dated positions or shares. This is when you load up on them swing trades and you sit back, you relax. I know sometimes it sucks looking at it. I know. Okay. I understand. Some people might be sitting in the red. I'm sitting in the red, a decent amount of red. It is what it is. Okay. But, I'm just going to say, when these things look like how they are, you probably don't have much more downside. So if you just sit on your hands and don't even look at the screens for the next few trading sessions, and you end up, doing some of the things we're talking about here, if you come a little bit lower, all right, that is when, all right, you probably have a quick snapback like we had right here, right around the corner. So, once you see this really ugly, candle right there, once you see the ugliness, just sit back, maybe don't even watch the screens, and just wait. These are the times you establish the swing positions. And again, you're not going to get everything perfect. I don't get everything perfect, but I still have managed to swing it up this year. All right. And in the end, we are in an aggressive uptrend. And until that changes, all right, these dips will remain the buying opportunities. Now, because of what I mentioned there on the monthly time frame at the beginning of the video, we are going to stay cautious on this rebound here. I'm just going to say, I think it's the time to reset. Okay. You're taking positions, where prices are right now around this area. You took positions, you went heavy on the last dip over there. Okay. Let's just go over the daily chart. In reality here, if you were buying, dated position, we're talking 2 or 3 months out, guys, 1.5 weeks went by on your options contracts. That is not the end of the world. Okay. You're talking 2 months, that's 8 weeks. Okay. This is now deteriorated, 15% of that value. It is what it is. If you end up, seeing a rally up here and we do end up making it back up to the highs, that's when it's really not going to matter in the end. If you had 3 months, you saw, we're talking like 7 or 8% of your contracts go out the window because we are at the same prices you were buying at over here. In reality, this is probably not going much lower than over here because of the other things I have just pointed to. I'm also going to point to market crash is not happening right now. It is just how it is. People think the market's going to fall off a cliff. I don't think it's time for that. The VIX is not behaving like it is time for that. You just look at what actually happened during a market crash. The VIX likes to spike and then stay elevated. Even when it crashed 50% over here, you still had it stay elevated. It did not do so over here. We are still in the dumps over here on Mr. VIX, and all of these spikes are getting sold, which is represented by these upper wicks. Same thing over here. I will say you're consolidating above these short-term moving averages. That's not the best look, but you get what I'm saying. Okay. So, just keep that in mind. Okay. If things are painful right now, guys, do not look at it like that. Just stop looking at the screens if you thought, Tuesday was painful, because the SPY is only down 0.36%. We didn't even take out the low from the previous candle. Same with QQQ over here. Well, we did. We slightly did, but ever so slightly. So if that is you, I am just going to say, and if you have some time or you have shares and you were just focusing on the swing trade, that I just spoke about. If that is you, it might be in your best interest to just not watch the screens right now until things start recovering. It's not the end of the world. All right. It is something that could probably benefit you so you don't start selling, panic selling into a bottom. Now, again, do I know the bottom is right around the corner? No, but I just pointed to when this thing looks like this, when you have, IWM's daily RSI already having a bullish divergence, and there's the 0.618 fib sitting right below with all the confluence, and things are already in the dumps, it's probably not going much lower. This is where you have a few more days of red, and then you put in a major bottom. All right, so there's that. Now, again, with what I was saying on the monthly candle over here, we're going to be cautious. Here's going to be the tell over here. Are we starting a larger correction? We're going to have that, the what's that chart called? The market cycle chart, where it goes up and then goes down, and then if it's about to roll over, it has one last swing up, and then it does that. You're going to at least get that one last swing up before it then goes into oblivion. I will just draw that out for us. Okay. It goes a little something like this. Oh, it's going. Everyone's hyped. It starts going. Everyone's panicking. You panic sell down here, but then boom, it comes back into the golden pocket. You get that one last spike, and then it rolls over and dies. Okay. Even if the market is going to roll over, you're going to have this spike right here. And if you want, you can take advantage of that and get out, and you can just sit on your hands and be flat and do absolutely nothing. And then that is, that's where we are going to talk about right now. If that happens, this is going to be the tell. Nasdaq over here not last year, 2021, end of 2021 going into 2022, the year before the bear market started, right before the bear market started, which that was this. We saw, a pretty decent sized correction here, 37%. Okay. If you want to watch out for this sign, I am going to be doing so, and I will update you guys on this. Okay. You have the nice upper wick that printed over here, just like over here. You don't have any bearish divergence going on in the monthly RSI or anything like that. You don't have that. That was present last time. But you do have a similar candlestick that printed right over here after this, wide body green bar up there. All right. Nasdaq did not make a new high the following month. SPY did. The S&P 500 over here did make the new high the following month, whereas the Nasdaq didn't. If we see that divergence start developing, that is something to know. That is something that tells us, like, hey, maybe we are going to have the same thing. And maybe if you want to be cautious, that is the time. Just my opinion. Okay. Like I said, new data presents itself. We're going to adapt the thesis. We are going to adjust the thesis, not adapt, adjust. Okay. Now, support and resistance over here on SPY, guys. All you're going to be paying attention to on the downside, 586.12, 583.32, 580.91. I think 580.91 is probably going to be taken out after what we saw on Tuesday. That is just my opinion. Between 576.75 and 580.91, you want to see buyers start stepping back into the equation. That is that. Okay. Come over the 4-hour time frame. I will point out 4-hour RSI is almost oversold. When you had this massive dump and people thought the market was crashing over here, what happened? Buyers stepped in when this thing got oversold. This is what I'm saying. It's probably right around the corner. Even when, you fell off the cliff over here, if you hit oversold territory, yeah, you got your bounce. Okay. Well, you hit it, almost there, and then you're hitting it right here the second time. Well, that's kind of what we have over here. All right. So, same thing over here. This, when everything is looking bleak, everything is looking grim, this is still going to hold up. These 4-hour RSIs and the daily RSIs getting oversold is typically what marks our bottoms. Combine that with the market being extremely fearful. All right. That is what is going to put the bottoms in. And, it doesn't have to be a major bottom or anything like that, but it holds up. Sometimes you could dance around just like that. We will see if this is going to be one of those times, but until proven that that is happening, yeah, every other time here, you got to go all the way back to the bear market, except for this one time right here where you hit oversold territory on the 4-hour RSI and SPY, and then you start bouncing back. You want to count how many times that was? We got a 1, 2, 3, 4, 5, kind of 6, but 5, 6, 7. 1 out of those 7 times, price decided to dance around over here. Okay. And at that point, you hit oversold territories on this candlestick right here. You fell a little bit lower there, another $10, another 2.5%, and then you end up rallying 1.5%. It took 3 weeks, all right, about 3 weeks there, but you got up 1.5% from where you were buying that day. I can't tell you if that is going to be this case. If it does develop like this, okay, if we dance around here and have that, because let's look at it this way, 1 out of 7 of those times it happened, 1 out of the 7 times you came back, swung up, you didn't take out the high. You actually only had like a 50% retracement. If you just go like that, you only had a 50% retracement, and then you sold down to a new low. So if we do develop down here like this, if we don't quickly just snap back when this thing gets into oversold territory, okay, I want to see a quick snap back. If you do not, and you print something like this, probably is going to print a lower high, and then we're going to see that by new lows, followed by new lows. And at that point, after that, we will start looking for buyers step in. All right. But, you know, this is kind of a clue right here that we could be paying attention to. If it does not just bounce right back, then we are probably going to have that similar scenario where it would look like this. Oh, you hold that. Oh, you come up 50% retracement from that one. All right. And then you go down to new low, and then you start going. Something like that. We don't know exactly how these things are going to play out, but what we can do is look back at history, back at the previous charts, the short term, you know, history, I guess we'll call it, because it's only the past few years. All right. I'm not going to sit there going all the way back because I don't think it's really relevant. All right. We're going to look back at what has happened over the last few years. And this is something that is held up for the last few years. This is over on SPY. All right. So I do think 580.91 is going to be taken out because we printed that bearish engulfing candlestick on Tuesday. But I'm going to be watching for those context clues so I can make the most out of this market and swing trade in this market. And I think it would be in your best interest to do the same. I will keep us updated here on this channel, though, so you don't have to do the heavy mental lift in there. I got you. All right. You know, on the upside, SPY, you're watching 587.66. 591.04, 593, 595.75, 597.78. I don't think we're going to just snap back up here on one day. We can. Honestly, it would only be like a 2% move, but I think we're much more likely to either swing down and then put in something like we had over here, okay? Or you base out and then you start lifting off of that. I think that is much more likely than that's just, you know, hitting it with a 2% day and we're back up. If you get a 2% day here next day, all right, and you end up back here at 597.78. At that point, we're probably going to go to all-time highs. That is only another less than 2% away. Okay? I don't think that's probable. I think we're probably going to either base around or you go a little lower. So either you base around here for a little, then you go up like that, or you are going to go like something like this. Okay? That is SPY. QQQ. What do we got cooking, guys? What do we got cooking on QQQ over here? Well, similar candlestick as SPY, bearish engulfing candlestick on the day. A lot of the candles we're going to look at today are those bearish engulfing candlesticks. On the downside, guys, we're watching 509.29. If 511.45 cannot hold, we're watching 509.29. That is the low from about a week and a half ago, and that's what I was saying. I don't condone the short-term options trading, but even if you did, when we were calling it out over here, you would have gotten smoked over here for a little bit, but if you held on, you would have, you know, been up hundreds of percents. But then now, guys, everything is coming back down to the lows, and now you're smoked again. Okay? I don't condone the short-term options trading. I don't think it's a good idea. But, you know, at the end of the day, you did end up from this point right here. You went a little lower. You saw the sick, nasty rally. The people are complaining, oh, you said it would rally. Guys, it did. It did. All right? I called out the Nasdaq McClellan oscillator over there. It was at a point where you see it clap back from, and you get these aggressive rallies. We literally pulled back up to the golden pocket, and then I was sitting here saying, we really have to clear the 0.786 fibs on QQ and SPY to start seeing new highs. I will always, you know, give my opinion, as this is my channel. My opinion was that we were probably going to be heading up to new highs. But again, I definitely pointed out that we had to get above the 0.786 fibs. So if anybody's sitting there complaining in the comments, I know you're just not using your head. I know you just, you know, you're just salty. I understand. Or you're just a hater and you want to bring your boy down. I don't know. But we saw the sick, nasty rally. It is what it is. Okay? Bottom to top. Guys, that was a $22 move in 3 to 4 trading sessions. How are you going to complain about it? I don't know. I don't know. Nonetheless, guys, I'm still here saying downside is limited. I didn't think this was going to be a dead cat bounce before doing so, but if it was going to happen, sellers were going to step in here in the golden pocket, and I definitely 110% called that one out. And it is up to you to take this, take action, make your own decisions off of the information that I am portraying to you. It is up to you. I cannot pull the triggers for you. All right. You can hold, you cannot hold. I will give you the information. That is all I can do. Okay. All right. Support over here on QQ 509.29. And then you are hoping 504 holds over here, because if 504 does not hold, we have risk of coming down here to 594.49. Do I think that is going to be the case? This is one of those opinions I was just telling you about. I'll give you all the information. You can be mechanical about it if you want, but I will also give my opinion. My opinion is that we're probably not going to take out 504, because if you do, you're probably coming down here to 494.49. Buyers final stand right here, 504. I'm out of breath. Okay. On the upside, what are we going to be paying attention to? We got 515.58, 517.66, 519.36, and 521.76. I do not think you're going to get right back up there. I think it's going to take some time. All right. I think it's going to take a lot of time. No, but I pointed out in SPY, you're probably going to either base around. All right. Maybe come back up, put in a high here, make a higher low, and then you go. You could see that on the hourly time frame, or you're probably going to, hit it with a quick little snapback after coming back down here around 504. We'll say 504 to 506. That is that. Okay. Same thing as SPY. 4-hour RSI is near oversold territory. If it comes down to oversold territory, I'm just going to point out where it is right now. And we're just going to see previous moves from right there. What has happened? You're right here. You came down another $10. What's another $10 down from current price? All right. That's coming down here to 500. And then you bounce back from there. All right. That's what happened over here when the 4-hour RSI, you were right here on this candlestick when you hit that line. You still did end up coming down another $10. What happened over here? And this is the situation. If we see this happen, where you don't bounce back immediately after 4 hours RSI gets into oversold territory, okay? If it does not, then we're going to look for a lower high, all right? Maybe 50% retracement. See it right here. All right. I went to the golden pocket in that case anyway. But, we're going to be looking for that lower high, and then we are looking for a price to, swing back down there. Okay, because every other time you hit the oversold territory and you kind of start doing what I was just talking about, you either snap right back, or you will hit it with this, where you swing up, you make the lower high, then you have the higher low, and then you take that out. And this is when hey, basing process is done. We're going to start moving up or stair stepping up. All right. There we go, guys. All right. You hit it. You bounce right back for an aggressive rally almost immediately. You hit it. You did not. Okay. You did not do that. You ended up dancing around there for a little bit, putting a bullish divergence, and then you went up. And this is what I was saying we could be on the lookout for. If we do see it just dance around here in oversold territory, we probably are going to get that relief bounce. All right. It doesn't have to be as aggressive, but we're going to expect that to be sold right off the bat if we start seeing this happen over the coming, 1 to 2 trading sessions. Okay. That's really what we're watching over here on QQQ. All right. And that is it. IWM, guys, I gave my thoughts, and this is a big, component of my thesis over here. IWM and DIA being already oversold. I just don't think there's much more downside when these things look like they do. It just doesn't make sense to me. All right. You do have this fresh downtrend to be paying attention to. Break above the trend line, guys. At that point, you're probably going to start moving back up. You do have to clear 226.64 to start heading up to 230.55. By that point, guys, all right, you are probably going to be well on your way. All right, so, I don't watch the 50% retracement. It's just for, showing purposes there. Okay, you get above 226.64. You probably are going to test 230.55, but at that point, you're also probably going to come up here to 235. Okay, your support on IWM, 220.20. 218.07, and then you watch 215.20 down here, which is the 0.618 Fibonacci retracement level from this whole rally on up. Okay, upside resistance, you have 221.81. We're going to add a new one right here. We're going to have, you know, our Tuesday's high right there, 223.28, 224.66, and 226.64. Get above here, 230.55, and then 235 is likely incoming. DIA, all right, you actually kind of had that similar downtrend kind of look to you over here as well. All right, not as pretty there, but I will point out it's kind of there. All right, nonetheless, look for a break of this trend line. You're going to come into, you know, resistance supply again, just like we were looking at this as supply before. If you get above 433.20, that's when you were probably going to start heading up here. But, you know, as you can see, we are underneath the short-term moving averages, and we're going to need to clear these. Okay. You're all, you know, look at that. You found resistance right there. You pulled back, and then you went on your way. Once you cleared them, this day right here, you really started moving. All right, that can happen, but we're going to need to see them get cleared. And you're going to need to see a, you know, daily close well above 433.20 at that point. All right, for us to really start looking for higher prices. And till that point, 431.42 to 433.20, expect sellers to step in. Downside support, 421.72. I think you're probably going to undercut that, put in a bullish divergence here on the daily RSI. You come down to 416.44. I don't know, but if you do, that's not a good look. If you do come down here, okay, you're going to have a double bottom. I don't think that's going to play out. I think you would come back up for a lower high, and then you would come back down. If you take out 416.44, you have taken out your last swing low here on the weekly time frame, and that is not, I was talking about it in, you know, the last video. Guys, it is much easier trading a trending market than a, you know, non-trending market, a flat market, a no trend market, or a downtrending market. Well, I mean, regardless, the downtrending market would give us, you know, something to go off of. But let's look at it this way. You have the higher high. You now would have a lower low. You are now trendless until you make this next move. All right. If you come up here for the lower high, followed by the lower low, at that point, we have the downtrending market. You know, this whole mess right here where you make the higher high and then also the lower low, that creates the trendless market. That creates, you know, we're talking weeks to a month here, weeks to honestly 2 months, where you're probably going to be stuck in that trendless market where you're just going to have to play the guessing game, you know, or you are going to have to play in a very cautious manner here. And it's just not as lucrative. I've, you know, experienced that, and it's, you know, not enjoyable trading in the trendless market. It's like over here, guys. All right. You know, as of right here, you came down. So this is a clear, you know, it's not the trendless market. You shifted, okay? You went right here, right when you broke this low, right here. You know, hey, all right, for the next few weeks, we're probably going to be able to trade in the downward direction. We're going to be able to trade these in short pops. So then, you know, you keep going, you get the pop. You know, this is a pop that probably gets sold into a new low, all right? Well, guess what? With what we just described, if you take this out, you did not end up doing what you did over here. What you actually would have done is you would have had the higher high over here, followed by this now new low underneath here. And now you're in a trendless market. Whereas over here, you had a lot of room to, you know, to pick that up. You had the higher low, okay? And then boom. And then right here, you would have known about it. Well, over here, you know, most of that move here would have just been missed to the downside. You get what I'm saying, okay? It is not enjoyable. And it is something that, you know, I'm just going to say is more frustrating, okay, to trade than a trending market. So ideally, guys, you are going to hold this 416.44 spot, and then we're going to rally back up. Now, because of what I point out on those monthly charts, guys, on this rally back up, we're going to stay cautious. We're going to look this next month. We're going to be paying attention to, are we going to be seeing the lower high in the Nasdaq and maybe a higher high on SPY? I don't know exactly how it's going to play out, but that is how it's gone in the past. Right over here. And this is the weekly chart. What about the monthly chart? Huh? About the monthly chart. Right here, S&P 500 made the higher high. Nasdaq did not. Okay, Nasdaq still rebounded the following month. And that's what I'm saying. I think we are set up to rebound. I don't know if you take out the you know, higher high. We just printed a really ugly monthly candlestick. It's not pretty. All right, so there's that. All right, guys, let's go over the tickers real quick. Nvidia over here, guys, bearish engulfing candlestick on the daily time frame. If 133.79 is lost. We're watching 132.60. Okay. And then underneath there, 131.26. Already know buyers are sitting down here. So expect a higher low to be put in over here. 131.26 to 132.60. That is that. Upside resistance, 136.70, 139.02, 141.90. If you come back up to 141.90, at that point, you probably are going to come, and test that 145 psych level, 145 to 146.54. All right. Tesla. I know it's looking real ugly. I understand. But, same thing I was pointing out on the indices, guys. If this thing ends up getting into oversold territory, downside is probably limited. All right. And you could start looking for, a big rally that you could start playing. All right. Our hourly RSI is already oversold. So I don't know if it's going to be like these corrections over here. I really don't. Okay. It can go into the dumps. It can. All right. But, a lot of time when this thing gets oversold, when we start getting these oversold readings on the 1 hour, the 4 hour, the daily, that is when we are going to start seeing price bounce back. You did have, a bearish engulfing candlestick closed out right at the low, increasing volume. You're probably going to go lower. I gave my thoughts in the last video on this. 384.29 up to 402.67. That is where I'm looking for, the next major bottom to be put in. All right. I don't do the whole Elliott wave thing, but I will point out you have an A, you have a B, you have a C. Okay. This is not an impulsive move. Okay. If you then come up, I'm just not going to say it's an impulsive move. Let's be completely real about this. All right. There's no way this is the impulsive move in the downward direction. If you just skyrocketed up like this and you had this, there's just no way. Okay. So we're going to look for a higher low over here compared to over here. And then we're going to look to go back onto this uptrend over here. All right. So between 384.29 and 402.67, which that is where you are as of Tuesday's close over there. All right. We're going to be looking for buyers to start stepping back in. Worst case scenario, 358.64 to 384.29. We look for that bottom to be put in. Regardless, I think if you are buying, months out in your contracts, we're talking, March calls or later. We're talking shares. I think you have a successful swing trade waiting around the corner if you are buying this dip over here. I do think it goes lower. I think it's probably going to test, around 384.29. From that point, I do think it's going to start getting bought up. You're going to have the weekly 9 sitting right over there. We know the short-term moving average over here on the weekly time frame can bring buyers back into the equation after these aggressive sells. All right. You had your signal right there that, hey, things were not going to be going straight up. You were looking pretty good intra-week over here last week. And then guess what? You end up selling and you printed another ugly candlestick over here on the weekly time frame. We were excited about that. And then you did that and we were like, it's probably not going straight up yet. And, guys, that's, really like what I was saying. No short-term options trading. You're not going to have a good time. But you can focus on the strong tickers and buy in on the pullbacks and you're going to have a good time. Tesla is one of these things that I do think is going to do very well, on this next swing up. Meta over here, guys, I'm not going to say this is a pretty looking chart. And, monthly candlestick wise, not at all pretty. It's just not. There's no ifs, ands, or buts about it. It's not a pretty candle. You can move up after these not so pretty candles. But, again, that is a really long upper wick after the last two upper wicks here not being so long. And now you have that, caution is warranted. Maybe we don't take out the high next month. I don't know how that's exactly going to play out. I really don't. You look at the weekly chart. It's also not the prettiest thing over here. If the market as a whole decides to start turning around, hey, then this is probably going to turn around. But at the same time, this isn't a pretty look on the weekly. This is very much so not a pretty look on the monthly. All right. So don't expect too much over here. Expect once you bounce back from here, probably in between 570 and 578.46. Expect you to then come back up and test, 616.89. And then I wouldn't be expecting much more after that. I really wouldn't. Okay. Just my opinion. If you come back, we'll say even pull back over there. That's within the golden pocket. Okay. So that's Meta. We'll talk about Microsoft. This is one with the ugliest monthly candle out of all of them. What the heck is that? What the heck is that? Okay. These are not things you print and then you just immediately move up off of these, long upper wicks here. You typically are going to be, coming up the following month. Excuse moi. All right. And I hope everyone was safe last night. Hope everyone enjoyed their New Year's Eve and had a good time. But you know, guys, these are not things you're just going to immediately start moving back up the highs off of. You typically don't see it. And if you do see it, that's when you have a really strong move loading, because you faded the whole, bearish candlestick here. And, that is just a recipe for explosion to the upside. But if that doesn't happen, if you don't take out this high, then guess what? You're just going to be expecting a lower high, and then you continue lower. All right. So that could be something that is loading. And like I said, when new data is presented, I will adjust. And it is what it is. All right. You cannot be perfect in the market, but you can do your best in the market. And you can make sure you have a good time. All right. And if you get this new data and you just stick your head under a rock, you're probably not going to have a good time, because then you're going to be looking for it to make new highs. And then you get back up to break even or a little profits, and you don't sell because you're expecting those new highs, and the new highs don't come. And then boom, it comes back down. And there you have the bad time. There you go. Okay. So this is Microsoft over here, guys. Daily time frame. I'm just going to say, broke out from all this consolidation. I know you're pulling back into it, but you clear as day made the higher high over here compared to, these descending highs over here. You're pulling back in the consolidation. You're in the golden pocket. Your daily RSI is down to the spot where every time except for once over here over the past few years, you have been, finding your short-term bottom, and then you move up off of that. I don't know exactly how this is going to go with how everything's looking. All right. But, I'm going to naturally expect buyers to step in here in the golden pocket between 416.50 and 425. That is that. All right. Talked about some meta. We'll talk about Goog. And this is something, I don't know how to really look at these things, guys. I'm going to be telling you, straight honest truth right here. I'm pretty conflicted. We got those monthly candles looking butt ugly. All right. So we're going to be looking for the lower high. But then you got things like, Goog, Amazon, and Apple, and Tesla over there that, just broke out into new highs. Okay. Google over here just broke out to new highs. You're probably finding a higher low over here, and you're going to bounce back. Probably going to go something like this. Expect buyers off of, 183.79 if tested. That's going to be where the weekly 9 is down here. I know that's a ways away. Not saying we get down there. All right. But it's something to pay attention to. Support, if you lose 188.90, we'll call it, lose 188.90, we're probably going to revisit 186.37. Then you watch 183.79, and on the weekly chart, you can see that is where the confluence is. Okay, that is where we have the previous breakout level right over here. Not the all-time high breakout like this, but the previous breakout level that led to that new swing high, that new all-time high up there. That is 183.79, and then you also have the weekly 9 sitting down here. That is probably where we get buyers. And worst case scenario, you dip a little lower down to 180.17, $10 lower than the current price. And that's where you'll have the weekly 21 meeting you halfway. You'll have the golden pocket from this whole most recent advance. All right. So, that's why I'm saying I am conflicted on, monthly candles look butt ugly. You got things like Goog, they don't look butt ugly. This thing probably continues to make new highs this next month. All right. Some of these look strong. Okay. But then you have the Nasdaq looking like that, and you're like, oh my God, what is that thing? All right, coming over here to Amazon. Again, this is one of those things that's conflicting. We have Apple, Amazon, Google, and Tesla all making those new highs, and now just pulling back to test some key spots. Yeah, you're probably going to get bought up to new highs. Okay, where I have this circle right here is where I'm going to be looking for buyers to step back in between 215.90 and 210. You have, I guess, have it right here. There you go. All right, guys, you have the golden pocket starting from this most recent advance into new highs. It's going to be down there at 210. You have the most recent breakout level into those new highs at 215.90. It was your previous all-time high over here, just like you pulled back into this all-time high over here, and you found buyers. Okay, and if you also add a little bit more confluence, guess what? You had the 0.618 fib. So that is literally like you testing right here at 210. You pull back, you slightly come back into these highs, just like you did over here. Come back and retrace the whole move down to the 0.618 Fibonacci retracement level, and then you bounce back from that. All right. So I don't know exactly where it's going to, have buyers start stepping back in, but you do have the weekly 9 coming in over here around 215.90, and then right under there at 210, you're going to have the 0.618 fib. Expect buyers in between 210 and 215.90 for a move back up to the highs. Apple over here, it's another one, guys. You just broke out of, 4 to 5 months of consolidation here. We're now like a little over a month and 1 week into this. Expect buyers on this pullback. All right. The buyers are probably taking you up to new highs. We're probably going 265 plus on this move. maybe 270. All right. I don't know exactly how it's going to go, but I could point to that very bullish weekly chart right there and just say this dip is a clear as day buying opportunity. It is what it is. Daily RSI had the bearish divergence over here. You're pulling back, but at the same time, weekly looks like this. Okay. I know people are going to be like, oh, Henry, it looks so bearish. What are you talking about? Guys, look at the broader trend. Look at the broader trend. You broke out over here. You tested the highs. You found buyers. All right. Like very quick. This is how I see it. Even if you're buying right here and within that week, you get this move back down to 237.23, the previous all-time high here. It's probably going to turn into like this, where within 1 week, boom, you're back up. And that's why I say short-term option trading is a mess, because if you start buying right here, you're going to be down. We're talking like 90 to 95%. All right. On 1 to 3 week options. Well, what happens if you buy 2 to 3 months out? All right. If you buy right here and it comes back down here, you're not crapping the bet. You're not sitting there panicking. You were sitting there being like, oh, I'm sitting on a 50% loss right here. But then in reality, a week later, well, probably not even 50%. If you're buying right here, even with February calls, you get down here, you're probably down 20, 30%. All right. March calls, you're probably down 15 to 20%. Okay. And you're like, oh, things suck, but they're really not that bad. I have a crap ton of time and I know this is a bullish setup. And then in reality, it goes like that. You're down, and then boom, within a week, you're up. All right. And then boom, within another week, you're probably up now 50 to 100%. This is what I'm saying. It is much easier to time things when you have a longer time horizon to see your, trades play out there. Whereas if you are in the short-term options, you see a week like this, you panic sell the bottom because you're like, oh, I got to do what I got to do and I got to take the loss. And then the thing comes right back, then, that same week, and you're like, oh my God. And the next week, oh, those would have been up 50 to 100% instead of me selling for the 80, 90% loss. I guess what I'm saying, you're going to have a bad time if you're trying to, do what I'm talking about here on these charts. I talk about, the daily charts mainly and the weekly charts. If you're trying to play these things with the short-term options, you're probably going to have a bad time. There are probably other channels that cover, short-dated stuff like that. I just don't do it. I don't think, the majority of people are going to have a good time like that. So I don't do it. And like I also know, I don't have a good time like that. So I definitely don't do it. Look for buyers over here. This is your, breakout zone over here. I have this candle right there, 244.54 to 247.09. All right. Expect buyers to step back into the mix over there. And if not, guys, worst case scenario, we pull back and we retest this and you have a massive buying opportunity right there. All right. Now let's talk about chips, guys. I don't know if this thing is actually going to mean anything or not. These trend lines right here. If you end up, you just had your second breakdown. We had a false breakdown here, came back up almost to the high there, almost took it out. All right. And then now if you're breaking down and you somehow return back up here, I'm taking these trend lines off. They meant absolutely nothing to us. They meant absolutely nothing the whole entire time. And that sucks. All right. That is what it is. What I can point out here, clear as day, is you have this weekly candle from 2 weeks ago marking out a range. You break above 254.47, good things are probably likely to happen. You break underneath 236.54, terrible things are probably likely to happen. All right. That is what you watch from here moving forward on SMH, because I don't know if this thing is actually going to be, doing that. You had the false breakdown and then you broke down again. So I don't know. But then you look at things like TSM, guys, and I can't imagine this failing. I can't imagine this marking the top. I think we're probably going to pull back and then create a higher high after that. That is how I see TSM. MU, guys, underneath 84.91. You're watching 79.15. You have absolutely nothing in between here and down here. Avgo, how you looking, guys? All right. I'm just going to say weekly time frame. It still looks to me like you want to continue up higher. I don't know exactly how this is going to play out, but it does definitely look like you want to continue up higher. All right. This is your, earnings little, range we got going on here. 211.11 is the bottom of it. I imagine that's probably going to hold. You have the short-term moving averages right here. And if it doesn't, 211.11 doesn't hold, then it sets you up for something like this. Okay. I don't think that's going to be the case. I think you're probably going to continue either consolidating or you start moving up to the highs, 251.88. Avgo, AMD, guys, on this next move down, you will have the bullish divergence here on the daily RSI. That is likely to mark your low. like your major low, your bottom low, your bottom before a sick, nasty ripper low. All right. Just like you had it over here. Just like you had it over here. You came down. What happened? You took out the low. Well, it marked the major low. Okay. Oh, what happened? You took out the low. RSI made a higher high. Bullish divergence sitting there. Oh, what happened? You bounced and you weren't tricked about it because Henry mentioned it. And then you came back down and it pulled down to a new low and put in the bullish divergence. And that was your bottom. Okay. What happened over here? Oh, you bounced and then it came back down to new low, but you had the bullish divergence. Over here, this took quite some time. All right. But at the end of the day, you did have the bullish divergence. Okay. We go back and, you know, it doesn't always have that. We're not going to talk about anything past that point. All right. But for years and years and years now, you've had a lot of these bottoms. 1, 2, 3, 4, 5 get marked out by those bullish divergences. And, you know, that was in your bear market. If we're just talking about the bull market, 4 bottoms. Okay. Every time the daily RSI got down here to oversold territory, yeah, your bottom was marked out by the bullish divergence. It's probably not going to be different this time. Between 111.31 and 116.37, expect buyers to start stepping back into the mix. And that is that. All right. ARM, guys, I give my thoughts. Once you see the daily RSI hit oversold territory at that point, you're probably not far from, you know, a big boy move right there where you see 20% over, you know, 1 to 2 weeks. That is what I think. All right. So maybe you see this, but then maybe it sparks back up and you're sitting there at 140 to 150 in 1 to 2 weeks from there. That is how I think this is probably going to play out. All right. Now let's talk about Bitcoin, guys. I mentioned in the last video, I think it's time to start watching it. I don't think it's going to get bought up from right here. But if it pulls back a little bit more and we see the miners and the crypto stocks end up taking a dive, there's one specifically that stands out to me, and we're going to talk about it right here. MSTR, big boy opportunity loading, in my personal opinion. You take the golden pocket from the whole move up here. It's in right there, right at that 267.89 spot. I got my alert set right there. That is what we're paying attention to. You hit that, you probably have a bottom, and it's probably going to run 20 to 30% on you really quick over the next 1 to 2 weeks. And yeah. All right, that is pretty much it. That is all I have to say on this. Daily RSI gets down to this 36 spot. For years now, you've had your bottom start getting put in around there. Okay, you have a 1, you have a 2, you have a 3, you have a 4. Technically, you have a 5, a 6, a 7. Is this going to be the 8th? And the guys, this is, you know, a pretty big span we're looking at here. All right, that is 660 days. That is, you know, we're talking almost 2 years there. Little less, 2.8 years, something like that. All right, or not 2.8. We're talking 1.8 years, something like that, that this condition is held. It's the same thing I pointed out on Nvidia. I know Nvidia isn't really one to move right now. I don't think individuals are really going to move until the market as a whole decides to turn around. I think that's right around the corner. But as you can see, all right, same exact spot, really, that 36, you know, area right there. If you hit it over the last few years, you ended up bouncing back. Okay. It was the same situation as Avgo over here. All right. Around 34.50 on the RSI. You hit it over the last, you know, I think it was like 2.5 years. You ended up seeing a bounce come out of there. Okay. And that did end up marking your bottom this time around. It took a little time there and it messed with us and you didn't hit the level for a while there. But then once you did, it literally marked the exact bottom. It was right here and you went up right away. Okay. Same thing of MSTR over here. Okay, if you pull back into that spot, you have Confluence sitting down there, 267.89. You have the golden pocket sitting down there, breakout level, golden pocket. Daily RSI is going to be at that spot that it's been bouncing back at. I think this is something that, you know, is worth putting some size on and taking that risk. I think it's probably one that's going to pay. All right, so that's how I'm going to be treating it. All right, now let's talk about some tickers that I see some opportunity loading in. I think something's starting to, you know, something's starting to happen. KO is right here at the apex of this. I do think this thing is about to snap upwards. Get a daily close above this trend line. That's going to be your signal. Get a daily close above 63.18. That's the confirmation. All right. That is when you're above the short-term moving average. At that point, you're probably going 63.92, 65.10, 66.58 in the short term. All right, I think this is probably getting ready to make a big move. I don't know how quick that big move is going to start up, but I think we'll probably have a trending move starting up instead of this, consolidation. Oh, this is the trendless stuff I was talking about. You see how, hey, all right, you're in this downtrend, right? Okay, and then you're sitting like that, right? You have the lower high. Well, it doesn't make the lower low. And now you come back up also for another lower high. This is the mess that if you fall into with the market, if the market gets trendless like that on the weekly chart, this is on the daily chart. Imagine if it happens on the weekly chart. You could have this for months. That would drive people bad, all right? Bad and mad and angry. And yeah, it wouldn't be a fun time. All right. So KO, I think it's about to start having these fun times. We're going to pay attention to it. Next one I'm going to point out is holding up better than, most other things I'm looking at right now. Roblox, guys, still just in this bullish consolidation. You're still, right at the 21 EMA, just like over here on Monday. I think this is probably, if the market starts really turning around, IWM starts moving, this is a mid cap that I do think is going to start really, picking up some steam here and moving. Okay. LLY, relative strength, contestant over here. You pull back. This is actually the golden pocket here from this most recent, advance right there. You found buyers right off the 0.786 fib. Let me just delete the previous one. Right there off the 0.786 fib. You put in a hammer candlestick, bullish candlestick nonetheless, pin bar, whatever you want to call it. I think this thing is probably getting ready to break that downtrend and then, go for a ride. We're going to adjust that to right there. Okay. I think it's getting ready. All right. And that's what I have for you guys. I hope you guys enjoyed today's video. I know it was a bit on the longer side, but we had a lot we had to cover. We had to talk about some things. We had to talk about, how we're going to, change the outlook here because of the monthly charts. Again, guys, it is what it is. We cannot control the market. And if you think you can control the market, I promise you're just going to have a bad time. You just have to kind of got to go along with what the market gives you at all times. And if not, if you're trying to fight it, that's when you have the bad time. All right, guys. So, I hope you enjoyed the video. I hope everyone is, having a nice, lovely start to their new year. And guys, if you have goals for these, start off the new year strong. Maybe you start a little bit before. I was trying to start a little bit before. All right. But, in reality, start at that, new year strong, and you have a better shot, better odds of continuing throughout the rest of the year. If you do not start out the new year strong and you just set these goals, then that tells your mind subconsciously, oh, I can stop these goals. But if you hammer them into yourself, I remember I grew up, I don't think it actually works like this, but I grew up, my neighbor's ma had a saying. It takes 21 days to make or break a habit. Okay. I'm not going to tell you it takes 21 days because I think it takes more like 3 to 4 months. But, put in those, we're going to say 1 to 3 months, the solid 1 to 3 months, solid reps, and you have a solid foundation for the rest of your year. So good luck, have a good time, and stick to those goals. And with that being said, I will catch y'all in the next one. Peace.